Hey, what's going on? It's Scott Taylor with San Diego Real Estate Hunter.com, licensed in the state of California for both real estate and mortgages with an emphasis on San Diego. Now, you're here to get more information regarding a jumbo mortgage refinance, and that's what this educational video is all about. Now, to be honest with you, I probably could have lumped this in with the other jumbo mortgage purchase, but I wanted to do it just a little bit different, more tailored. Now, let's backtrack a little bit. Let's talk about what a jumbo mortgage loan amount is. Now, we can go up to the conforming loan limit in California. We're talking about San Diego to keep it simple, and that's $424,100 for a conforming loan. From a conforming loan up to the next level in San Diego, it's $649,750. That's either called super conforming or high balance. Now, any loan amount above that $649,750 in San Diego is a jumbo loan amount. Now, something to keep in mind, that's just the loan, not the purchase price. So your purchase price could be much, much higher, but if your loan amount is that or more, that's a jumbo. Something to keep in mind with that, even if you bought several years ago and your loan was less, if your new loan is more, then your new loan would be a jumbo mortgage loan, of course. So let's jump into it, and there's really gonna be some criteria or bullet points that I want to talk to you about. And the first one is, what do we talk about, how much money? So we're either gonna do a cash out refi, or we're gonna do a rate and term refi. So maybe a rate and term, you're like, hey Scott, all I wanna do is drop my current rate, keep the same loan amount. Or you might be like, hey, I have built up quite a bit of equity and I wanna do cash out for whatever you want. Vacation, to pay stuff off, maybe to like buy another place, maybe as far as investment, stocks, bonds, mutual funds, etc. Whatever you wanna do, okay? So total equity that we're going to need is at least 10%, between 10 and 15%. So however we structure it, let's just assume that you have a place, it gets appraised at $1 million. If we could go up to 90%, that's $900,000 loan amount. If we could go up to 15% equity, then that would be 85%, $850,000, okay? Let's talk about credit scores. Something to keep in mind with credit scores, I use Credit Karma and Credit Sesame as well. They're fantastic for checking debts, but they're not necessarily accurate for credit scores, how we run them. But something to keep in mind is something around 700. Again, could be a little bit less, could be a little bit more, depending on your profile, but something around 700. Now, something great with how we're gonna structure this is that you won't need mortgage insurance. So you won't be paying that extra fee every single month as far as mortgage insurance, because we won't ever go up to that amount. Usually if we stay 89.99% or less, then we're gonna be good to go. Something to keep in mind is this is for your primary residence. Now, these numbers won't change too much if it's for a vacation home or a second home, but it'll change quite a bit if it's an investment property. The reason why the lender takes on more risk, therefore they'd want more down or a better credit score, more cash reserves, that kind of thing. Now, max debt to income ratios. Again, it can vary, but I like to stick with about 43%. So what this means is we add up what's on your credit report with your future home mortgage, principal, interest, taxes, insurance, and if there's an HOA. We add those together. If the max we could be is 43%, let's say that's $4,300, all combined to keep it simple, then your income would need to be $10,000 gross per month or more, which is $120,000 per year. So those are the basics. Now let's talk about, just briefly, if you want to do a rate and term, it means you keep the same loan amount essentially that you have now. All you're doing is looking to drop the rate. And if you're looking to doing a cash out refinance, then that would mean, of course, that you want to take cash out to use it. One thing also I always like to talk about is closing costs, because it depends on the structure. Do you want to pay closing costs out of pocket, which means from your bank account? Do you want to put it into the loan? You can do that. Or do you want to know what's called a lender rebate, where you are approved for one rate, we do it at a rate that's a little bit higher. That difference, there's cash on the back end. We use that cash to pay for closing costs, okay? Now I want to talk about what it takes to get started with me. You would go online to fill out an application in 20 minutes or less. It works from your smartphone or computer. From there, I would run your credit, and then I'll give you a call. I'd say, hey, based off your application, based off your credit report, and based off your debts, we're looking good. Then I'd send you an email with the supporting documents that we're gonna need. Driver's license, social security card, last 2 years tax returns and W-2s, last full month's paychecks. Last 2 months, bank statements, all pages. If you have anything like a 401k or IRA, et cetera, that. And then, of course, depending on your bank statements, your credit report, we might need something like Chapter 7 or Chapter 13 paperwork or child support or alimony or divorce decree, that kind of thing. Once we get that from you, you can upload it to my website or send it to me via email. I process it right away. And then keep in mind, I work for a mortgage broker in between you, the borrower, and wholesale lenders. We have a lot of different programs available. So those numbers I gave you are run of the mill, they're right in the middle. So I would shop all those different lenders to see what's the best product for you. We would submit the loan, we would open escrow very quickly, and a lot of times we can close these jumbo loans in 21 days or less. So to get started, go to scottsloanapp.com. That's scottsloanapp.com, and I look forward to doing your jumbo mortgage sometime soon.